In a single day, the global financial world was shaken. A short message from former U.S. President Donald Trump sent shockwaves through Wall Street, wiping out nearly $2 trillion in market value, one of the steepest single-day losses in years. It all started with a social media post. Trump accused China of becoming hostile toward American trade interests and threatened to reimpose massive new tariffs on Chinese imports, especially those tied to rare earth materials, electronics, and advanced manufacturing. The message spread like wildfire. Traders, investors, and analysts all saw the same thing: the potential return of a trade war that once rattled the global economy during Trump's presidency. Within minutes, the markets began to crack. The S&P 500 fell sharply, more than 2.5% in a single session. The Nasdaq plunged over 3%, its worst drop since the early days of 2020. Across the board, technology and manufacturing stocks bled red. Tesla, Nvidia, AMD, Amazon all saw losses between 2 and 5% before the closing bell, but the damage didn't stop in the US. As night fell on New York, markets in Asia and Europe began to follow the same trend. The Nikkei in Japan, the Hang Seng in Hong Kong, and London's FTSE 100 all opened lower, dragged down by fears of a new wave of economic conflict. Analysts called it the Trump shock, not because it wasn't expected, but because it revealed just how fragile investor confidence really is. After months of steady growth and record highs in the tech sector, even a single tweet-length statement could send trillions of dollars evaporating into thin air. So why did this happen so quickly? Experts say the global economy is still heavily interlinked with China's supply chain. If Trump's tariffs were to return, costs for electronics, vehicles, and consumer goods could skyrocket, directly hurting companies that rely on Chinese parts or manufacturing. That fear alone was enough to trigger a panic sell-off. Meanwhile, investors rushed for safety. Bond prices surged, gold rose, and oil fell, classic signs of a flight to safety during uncertain times. Currencies like the Japanese yen and Swiss franc strengthened as traders pulled money from risky assets. In Washington, reactions were mixed. Some lawmakers criticized Trump's comments as reckless market manipulation, while his supporters praised his willingness to stand up to China. Beijing, meanwhile, has remained cautious, issuing a brief statement urging stability and cooperation, but warning that China will defend its interests firmly if new tariffs are imposed. So, what happens next? Markets will be watching closely. If Trump doubles down and announces a concrete tariff plan, we could see another round of sell-offs and even bigger global consequences. If he softens his tone or offers clarification, some of that $2 trillion might flow back into stocks as quickly as it vanished. For now, the event serves as a powerful reminder of how interconnected and how volatile the global economy has become. One person, one post, and one message can move markets worth trillions, affect millions of jobs, and shake the confidence of investors around the world. As the sun rises over Wall Street again, analysts, traders, and ordinary investors are all asking the same question: is this just a temporary tremor, or the start of something much bigger?